So if you're a student of the markets or you've been watching our videos for some time now, you've probably heard the term tax loss harvesting. But what exactly is it? And more importantly, how can it be put to work for you? Well, in today's video, we're going to discuss exactly that. Hi, I'm John Norberg, and welcome to the Financial Prof series. So tax loss harvesting, the 10-second explanation, ready, set, go. It's where you have two sets of investments, and you take investment A, that's showing a gain, and investment B that's showing a loss. You sell them in the same tax period, and the loss offsets some or all of the gain. You have harvested the loss and thereby pay less or no capital gains on the investment that made money. So that's it in a nutshell, right? Where basically anything that is showing a capital loss can offset a capital gains elsewhere. This is called tax loss harvesting. But when you do it, obviously there's the potential that we could be screwing ourselves out of potential gain if we wait for the loss to recover. Pardon the French. But if you do wait for that to recover, now you possibly missed out on a taxable opportunity. And who knows, maybe that investment never will recover. The idea is that we're being strategic about when, how, and what we're selling. Now, the question might also arise, well, if I've got an investment that, let's say I bought at $100,000, that's worth $150,000, and I have an investment I also bought at $100,000, and it's only worth $50,000 now, and I sell them both at the same time, in other words, do some tax loss harvesting to offset that gain, I still end up with only $200,000. How am I coming out ahead, John? It's a fair question. Two things to keep in mind. First things first, eventually all of us are going to die, right? And when we do, the investments that we hold inside our taxable accounts, our individuals, our joints, etc., whatever the case may be, get passed on to our heirs usually. And they inherit them with a step up in cost basis. In other words, that investment that was showing a $50,000 gain now has an increase in its cost basis, and for tax purposes, the government considers your heir as having purchased it at whatever the cost was on your date of death. So in this scenario, $150,000, right? Which is great because now no taxable gain. So the other thing to keep in mind is that there was actually a study that was done recently that shows there's probably some benefit to be gained other than just planning for that sometime event far down in the future. Because most of us want to see some kind of, benefit before the day we die, right? And what came out somewhat recently was a study done by some very smart folks at MIT, the Sloan School of Management. And what they discovered was that active tax loss harvesting can actually yield an alpha, that is a benefit or advantage, of somewhere close to 1%, depending on some different parameters, for your portfolio per year, which not only compounds over time, even if it might not sound like much compounded, it certainly can be, but 1% also happens to be roughly what most financial advisors charge for investment management, somewhere in that range, right? We here at Norberg Wealth Management, we charge 1% on portfolios that are north of $1 million. So if that's the case, and one of the strategies your advisor is using, like we do, is active tax loss harvesting, then there's a fair chance that they're already, with that one strategy alone, before they do anything else, paying for a substantial portion of the assets that they're managing and the fee that they're charging you, in other words. So if this is something that you want to find out, how do I put it into practice for my specific portfolio, if it even makes sense to do so, or you know what, I've been using this technique, but I don't feel like I'm as on top of it as I should be, and I feel like I'm leaving money on the table, well, give us a call. Drop us a line. We're happy to talk about how this might fit into your overall tax and investment strategy. And in the meantime, I'll see you out there.